Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 32, NASDAQ down 17, S&P's are flat. Gold contract down $12.60, traded $1,195 an ounce. Silver off 80 cents at $15.76 an ounce. Platinum down 13 at $1,195 an ounce. Copper off 2 pennies at $2.87 a pound. Light sweet crude flat at $55.94 a barrel. Bonds. The ever-ready bond market, folks, is amazing. You get the 10-year up 12 ticks at 127.20. The 30-year up 24 ticks at 145.27. In fact, the 30-year took out the October 15th high, folks. It looks like it's going to be an ABC structure in the way up that actually is going to blow away the 2012 highs in the bond market, which is just amazing. King dollar. King dollar down 392 ticks, trading out at 88.29. The euro up 53 at 124.90. And the yen down 60 at 117.22. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Volatility in spades out here, folks. We had a 40-point price spread in the S&Ps today. S&Ps got up to a price point of 2016, gave it up in spades. Bottom line, S&P is working its way down to 1820. Right now, you're at 1990. Dow Industrials, same setup in the Dow Industrials. We have a 374-point price spread out here today. The high was 427, 17,427. Right now, we're at 17,207. You're up 26 bucks. Bottom line, this is just setting up a monster ABC structure on the way down, bringing that baby into the 15,800 mark. NASDAQ Composite, same setup in the Composite. Composite got to a price point out here today of 46.45, and right now you're at 45.89. None of them can hold price. IWM followed right along, the Russell 2000. Russell 2000, the IWM got to 115.34. You're trading at 114.25 right now. Same type of setup. Gold market, we go over to gold. We take a look at gold. High volatility in the gold market also. The gold market, the low today in the gold market. Well, first off, the high was 1223. 1223, you hit at 0700 this morning. You got down to 1187. That 1187 got hit at 10:40 a.m. Right now, you're at 1194. We've done 218,000 contracts. Gold market is going into its sign of strength from December 1st. That had 342,000 contracts. Bottom line, gold still wants higher price. Why? Let's go right to King Dollar. King Dollar, folks, okay, has come off its highs with volume. What we have out here today, King Dollar's down 392 ticks. We've been down 700 ticks. We've done 55,000 contracts, so you're coming off the high with an expansion of volume out here. We'll see how it attacks this 87.45 number. Right now, you're at 88.29. Bonds. The bond market has been screaming for quite a while that it continues to want higher price, lower yield, and it's doing it in spades. It's just pretty amazing, actually. You know, the October 15th swing high seemed a long way away when we basically, you know, October 15th, it spiked up to 146.16. Then it pulls all the way back to 138, and that, for the bond market to move 9 points, 8 points like that is almost unheard. It is unheard of, folks. That's the ball. But guess what? We're up there. We're up there with volume. We hit 146.19 today. 146.16 is the high. And if you bring this on a continuous contract, the way this baby's set up, number one is that I'll bring this back. And when you see this, this is just crazy. But guess what? This is what we have happening, and you never know what is going to cause fluctuations in volatility like this, but I suspect we're going to get into the currency deal here, and it's the currency that's doing it. So the last high in the bond market was July of 2012. That was 153.11. The way this baby's set up, folks, it could be could be a much larger ABC structure in the way up and just blow that away. Your 8 point here is 127.23, which was the low that was generated in December of 2013. Your high was that October high of 146, and it's a 20-point A to B, which would get you up at the 160 level, which would take you over that 153. So it is a very large number. Now, market-wise, what you have is this. The currency in Russia imploded last night, okay? It's down 54% for the year. Last night, however, it went down 19%. Just to put this in context, okay? And if you don't think this is, well, the bottom line is it is serious, but if you don't think it's serious for other companies, countries, hedge funds, all of the above, folks, okay? We're going to walk you through this. Apple itself, we'll just start with Apple. Apple had to stop selling in Russia this afternoon, okay? Bottom line, why did they stop selling? Because guess what? They don't know what to sell their product for. That's what it comes down to. Sales stopped, flat out. I want to bring you back to long-term capital, 1998. In 1998, folks, okay, the Asian contagion actually started in Indonesia. And what happened there is that everyone's sitting fat and happy in the United States, figuring that, no, it's no big deal. We watched it happen for about 6 weeks. Then what ended up happening is that long-term capital was on the wrong side of a trade, very large trade. Bottom line, they imploded. As they imploded, that almost brought down the banking system. Now, if you want to hear something really bizarre, this is how far we've gone from 1998 to 2014. They almost brought down the system, and that trade was, they only had to get recapitalized at $3.5 billion. Yeah, $3.5 billion almost brought down the system. Okay, so now, and just to recap that whole deal, bad trade, the Fed turned around, they didn't want to bail them out, they made 16 financial institutions bail them out. Bottom line, bailed them out, calmed things down. That was only $3.5 billion. The banks sneeze $3.5 billion now. So, the real key is going to be who is holding the bag, what banks are holding the bag, what countries are holding the bag, and where is the bag. So, in that context, what you're going to see is you're going to see monster volatility continue in all markets. If you want to see something that is absolutely wild, I will bring gold up, and if you know, Andy and I had been talking about the Russians buying cars. If you want to see something GCG5, I'm going to show you gold in ruble terms, and this is a total mind blower, you know. But it shows why gold is a great currency, and shows why gold is a great insurance policy. In the last 45 days, in rubles, gold has gone from 49,389 rubles up to 86,000. Bottom line, what that is all about, okay, is that gold has gone up 85% in price. And what does that mean? What does that mean for the gold market? What it means in particular is this. It means that, number one, that's why people buy it. Number two, what that also means is that this crisis, folks, my take is only beginning, okay? This thing's not going to go away overnight. So what you're going to see more demand. The way that gold has been trading out here today, they're trying to slam it. Each time they're trying to slam it, the baby comes back. In the context of supply versus demand, my take is, guess what? You're going to see gold continue to have volatility, but to continue to move higher. I mean, it's pretty amazing. And I suspect there's going to be another shoe that's going to drop off somewhere. Because, see, the market itself, the bond market has been screaming it. The NASDAQ screaming it. The DAX in Germany, that came back today, but that came back after, I mean, the FTSE. Let's go to the FTSE first. The FTSE came right into the 2008 lows. FTSE out here this morning hit, what, 6144. That low is 6072. Bottom line is that you can expect high volatility. The October 15th swing low is going to get hit. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 38. NASDAQ's down 18. S&Ps are off. They're flat. We'll be right back.